Assalamualaikum warahmatullahi wabarakatuh. Good morning, sir. First of all, I would like to introduce myself to all at you here. I'm Safira Sapi Andriani. My student ID is 18104264119. I'm from class D. I take accounting English from Mr. Adi Mursalin. In this opportunity, I would like to answer the question given by my lecturer, Mr. Adi Mursalin. The question consists at their parts, namely Part A, which is related to the accounting theory and its practice. Part B, which is related to video at accounting, and Part C, which is related to accounting article. Will I start to answer the question in Part A? What is accounting? Write the definition of accounting to 5 experts. Definition at American Institute of Certified Public Accountants. Accounting is the art of identifying, recording, tracing, and summarizing in a significant manner and in terms of money, transaction, and events which are involved at least at a financial character and interpreting the result, the rate. Definition at one reef. Accounting is an information system that provides reports to stakeholders about the economic activities and conditions at a business. Definition at Donald Keys. Accounting may be based as identification, measurement, and communication of financial information about economic entities to interested persons. Definition at Arnold. Accounting is a system that provides information to anyone who must make decisions and control the implementation at the decision. Definition at Abu Bakar A.N. Wibowo. Accounting is an information system that recognizes and records financial transactions presented in financial statements. What is accounting cycle? And explain in the rules the cycle or the steps of accounting cycle. What is accounting cycle? The accounting cycle is the holistic process of recording and processing all financial transactions of a company from when the transaction account to its representation on the financial statement to closing the account steps of accounting cycle. Transaction. Financial transactions start the process. If there are no financial transactions, there will be nothing to keep track of. Journal entries. With the transaction set in place, the next step is to record these entries in the company journal in chronological order. Posting to the general ledgers, the journal entries are then passed to the general ledger, where a summary of all transactions to individual accounting can be seen. Trial balance. At the end of the accounting period, which may be quarter, months, or year, depending on the company, total balance is calculated for the accounts. Mention is accounting equation and explain the components of accounting equation. The basic accounting equation is all scaled The balance sheet equation is the relationship between assets, liabilities, and equity of the owner of a business. Basic accounting equation is the basic for bookkeeping in part. The basic equation component includes assets, liabilities, equity. Assets are resources owned by the company and its economic benefits for the future. Liabilities is an obligation that must be effected by the company from the consequence of past transaction. Equity is the residual value of assets owned by the company after reducing liabilities. What is account, and why are the use of account in accounting equation? An accounting is a record in the general ledger that is used to sort and store transactions. For example, companies will have a cash account in which to record every transaction that increases or decreases the company cash. Another account sales which collects all of the amounts from the sale of merchandise. Most accounting systems record that every transaction will affect to all more account. For example, a cash sale will increase the cash account and will increase the sales account. What is the purpose of accounting? The purpose of accounting to accumulate and report of financial information about the performance, financial position, and cash flow of a business. This information is then used to reach decisions about how to manage the business, or invest in it, or lend money to it. This information is accumulated in accounting record with accounting transactions, which are recorded either through such standards business transactions as customer invoicing or supplier invoice, or through more special transactions known as journal entries. What are assets, liabilities, and owner's equity? Assets are resources that are controlled by the company as a result of past events and where the future economic benefits are expected to be obtained by the company. Liabilities are current corporate liabilities arising from past events their company is expected to result in an outline of company research contain economic benefits. Equity is a residual right to a company asset after deducting all liabilities. What is business transaction? A business transaction is an activity or event that can be measured in terms of money and which affects to financial position of operation of the business entity. What are revenue, expense, and withdrawals? Definition of revenue is a statement relating to money or finance from the overall result of the main business product or service performed by the company in a period. Expense is a deduction from income that will generate net income before taking in the income statement. Withdrawal, namely deposit. Withdrawals of funds and deposit in the bank using checks, money orders of withdrawal slip. Usually, withdrawal of deposit will be subject to a finally collateral withdrawal of collateral for a loan by providing new collateral. Explain the step for analyzing the business transaction. The steps in processing business transactions are analysis and record process such as source, document, account, and analysis. Analyzing and processing transactions such as ledger, accounting for double entries, journaling, and posting illustration. Mention 6 business transactions happening in a company. Annul their business transaction analysis. The owner, Mr. Andre, invests ₹20 million. Equipment increases ₹15 million, and equitas decreases ₹35 million. Forecast equipment ₹4,500,000. Fight in cash ₹2 million. Receive a fraud credit. Forecast equipment increases ₹4,500,000. Cash decreases ₹2 million. Receive decreases ₹2,500,000. Complete consultant service of ₹80 million. Receive in cash for the remaining in credit. Cash increases ₹2 million. The owner withdraw $500,000 in cash from the business for personal use. Freight increases $1,500,000. Cost decreases $1,500,000. Parent amounting ₹3 million. Rent expense increases ₹3 million. Cash decreases ₹3 million. $400,000. Wages expense increases $400,000. Miscellaneous expenses $100,000. Cash decreases $500,000. Part B. In this part, the questions are related to the accounting video. I will answer the question based on the following instruction. Number 1. A. What is the title of the video? The title of the video is Chapter 1 Principle of Accounting. B. Who is the speaker in the video you watch? The speaker in the video I am watching is Mark Christopherson. What does the video tell you? The video tells you about principle of accounting. Explain the context in the details of the video you watch. First, the purpose of accounting among others. 1. Identify, record, and communicate the economic events of an organization to increase its users. 3 activities in accounting. One of them is identification. First, we do identification. After that, we can enter to recording, classify, and summarize. Then prepare accounting report by communication with a knowledge and interpret for user. The accounting process includes the bookkeeping function. There are 2 broad groups: user of financial information among other internal user and external user. In internal user, there are management, human resources, financial, and marketing. In external user, there are ARAs, investor, labor unions, creditor, and customer. Ethics in financial reporting. Standards of conduct by which one's actions are judged as right or wrong, honest or dishonest, fair and not fair, are ethics. Recent financial scandals include Enron.com, Hatfield, and others. Congress passed Sarbanes-Oxley effective financial reporting depends on sound ethical behavior. There is review question. Ethics are the standards of conduct by which one action objects as A. Right or wrong, B. Honest or dishonest, C. Fair or not fair, D. All of these options. The answer is D. All of these options. Next chapter 1 to 7. Various users need financial information, financial statement, balance sheet, income statement, statement of the owner's equity, statement of cash flow not disclosed, general except accounting principles. The accounting profession has attempted to develop set standards that are general accept and universally practiced. Chapter 1 to 8. There are organizations involved in standard setting which one is security and action communication, cost principle, historical. This gets that company record assets and their cost. Monetary unit assumption include in the accounting record online transaction that can be accessed term of money. Economy entity assumption requires that activity of the entity be kept separate and distinct from the activities of its owner and all other economic entities. Form of business ownership are proprietorship, partnership, and corporation. The basic accounting equation: asset, liabilities, owner equity. There are two variants on basic accounting equation among others: asset, liabilities, owner equity, also asset, owner equity, liabilities. Using the basic accounting equation, transactions are a business economic event recorded by the accounting might be external or internal. Not all activities represent transaction. Each transaction has a due effect on the accounting equation. Company prefer for financial statement from the summary accounting, income statement, owner equity statement, balance sheet, statement of cash flow, and list of the duration of video till accounting care of opportunities. Public accounting care in auditing and taxation serving the general public. Private accounting cares in industry working in cost accounting, budgeting, accounting information system, and taxation. Opportunities in government. Chris with the and in public colleges and university from accounting Chris with insurance companies of and law office the conduct investigation into the and fraud. What are the benefits for you watching to video? That benefit for me are knowing the purpose, principles, and create opportunities in accounting. Number 2. A. What is the title of the video? The title of the video is Chapter 1 Review of Accounting Equation and How Transaction Affects the Equation. B. Who is the speaker in the video you watch? The speaker in the video I watch is Mr. Debridge. What does the video tell you? That video tells the basic accounting equation, review of accounting equation, and transaction affect the equation. Explain the context in the details of the video you watch. First, the speaker says the basic accounting equation. The accounting equation is considered to be the foundation of the double entry accounting system. The accounting equation shows on a company balance sheet whereby the total of all the company assets equals the sum of the company liabilities, shareholders' equity. The formula for the accounting equation is asset equal liabilities plus owner equity. How to calculate the accounting equation? The balance sheet holds the basic of the accounting equation. 1. Look the company total asset on the balance sheet for the period. 2. Total liabilities, which should be a separate listing on the balance sheet. 3. Look at total shareholder equity and add the number to total liabilities. 4. Total asset will equal the sum of liabilities and total equity. The accounting equation helps to assess whether the business transaction carried on by the company are being accurately reflected in its books and account. Below are examples of items listed on the balance sheet. Asset includes cash and cash equivalents or listed assets, which might include treasury bill and certificates of deposit. Liabilities are debt, are what a company typical owner or needs to pay to keep the company running. Debts including long-term debt are liabilities as well as rent, tax, utilities, salaries, and wages, as well as dividends payable. Shareholders' equity. Shareholders' equity is a company total assets minus its total liabilities. Shareholders' equity represents the amounts of money that would be returned the shareholders if all the assets were liabilities and all the company debts was paid off. A. What are the benefits for you watching the video? The benefit for me is knowing what is accounting equation, knowing transaction affects the accounting equation, and also know how to calculate the accounting equation. Number 3. A. What is the title of the video? The title of the video is How to Do a Balance Sheet. B. Who he is the speaker in the video you watch? The speaker in the video I watch is Superface CVA. C. What does the video tell you? That video tells about balance sheet. Explain the context in the details of the video you watch. The video tells the balance sheet of Scammer Company on December. Part 1 of 4. Setting of your balance sheet. Use take basic accounting equation to make a balance sheet. This is asset equal liabilities plus owner's equity. Thus, a balance sheet has 3 sections. Assets, which are the resources owned, liabilities, which are the company debts, and owner equity, which is contribution by shareholder and the company earning. The information needed to complete the balance sheet can be found on company general ledger with financial transaction for a particular fact been recorded. 2. Cost the debt for the balance sheet. The balance sheet is created to show the asset, liabilities, and equity of company on a specific day of the year. Usually, company prefer an official balance sheet quarterly, the last day of March, June, September, and December, for example, and at the end of their fiscal year, such as December, but it can be done at any time. You might not finishing fitting together to balance sheet until several works after the end of the fiscal years. Part 2 of 4. Preparing the asset section. 1. List all current assets. Current assets are assets that can turn into cash within 1 year of the balance sheet date. They are listed in order of relative liquidity. In other words, how easily they could be converted into cash. 2. List non-current assets, also known as long-term assets. No current assets are defined as a company value of property, plant and equipment that can be used for more than 1 year minus depreciation. The general list will increase the current value of long-term assets. 3. Includes any intangible assets. These are also considered non-current intangible assets referred to non-monetary assets that have no physical substance and will last more than 1 year. 4. Add up the current and non-current assets totals and label this amount total assets. Here check that the total assets for your balance sheet are equal to the total assets from the company. Generally, the investigates and resolve any differences you find. Part 3 of 4. Preparing the liabilities section. Determine current liabilities. Current liabilities are liabilities that are due within 1 year of the balance sheet date. Calculate all long-term liabilities, also known as fixed liabilities. These are any liabilities that will not be set within 1 year. Long-term liabilities include long-term notes and mortgages, bonds payable, and pension plan obligation. Add the current liabilities subtotal to the long-term liabilities subtotal. Label this line total liabilities. The balance for total liabilities will be shown on the second part of your balance sheet and will be added to the owner equity. Part 4 of 4. Calculation owner equity and totals. Calculates retained earnings. Retained earnings are the amount of profit a company has earned from a particular time period. First, find the ending balance of retained earnings from the first period. The statement of retained earnings will not be listed on your balance sheet but will help you calculate owner's equity. 2. Calculate the owner equity. Equity consists of contributed capital, money invested in rates, earning history, some profits and loss. Here make a list all the equity account like common stock, treasury stock and the retained earnings number from step 1. Once all the equity accounts are listed, sum them and add the caption total owner's equity. Add the total liabilities and total owner's equity figures. Title the sum total liabilities and owner's equity. The balance sheet has been correctly prepared if total assets and total liabilities and owner's equity are equal. Last, you have to show that 2 of the total is balanced. What are the benefits for you watching the video? The benefit for me is knowing that the balance sheet must be balanced. Number 4. A. What is the title of the video? The title of the video is Financial Accounting Income Statement. What is the speaker in the video? Match speaker in the video. I match it much sir. What video does video tell you? The video tell about income statement. Explain the concept in the details of the video you watch. In addition to the single and multi-step methods, the income statement can be reported on a cash or accrual basis. An income statement reported on cash basis is typically used by small business that record transactions based on the exchange of cash. The revenues and expenses reported reflect cash rates on sales and cash. As with revenues, the exchange of cash does not dictate the amounts rewards for the expense. Income statements should help investors and creditors determine the financial performance of the enterprise, predict future performance, and assess the company of the business to garner future revenue stream through the reporting of income and expense. What are the benefits for you watching the video? The benefit for me is I know how to calculate income statement. Number 5. What is the title of the video? The title of the video is Introduction to Accounting 1. Who is the speaker in the video you watch? The speaker in the video I watch is Kimberly Dunn. What does the video tell you? That video tells about an intuitive approach to accounting. Explain the accounting in the details of the video you watch. First, an intuitive approach. What is accounting? Accounting is the language of business. Why the business need to communicate? Why does accounting exist? What kind of decision can accounting help people make? All different. There are other types of accounting, including tax accounting, management accounting, and financial accounting. Tax accounting. Most people think of tax when they think of accounts. Tax accounting helps determine how much is owed to the government for tax. Tax is a small part of accounting. Management accounting is designed to help people in business make decisions. Financial accounting designed to help people outside the business make decisions. Accounting brings it together in the language of business, including people and the process of capturing, summarizing, and referencing information about a business. Why is accounting cool? People who understand accounting understand business and have tools to make better decisions and more information. Accounting rule the world. What are the benefits for you watching the video? The benefit for me is knowing intuitive approach. Asset. Cash $1,000. Account receivable $3,200. Merchandise inventory $850. Land $10,000. Account payable $1,530. Cash increases $3,928. Income decreases. Account payable increases $1,055. Age decreases. Cash increases $3,700. Social capital decreases. Rent expense increases $1,200. Cash decreases. Account receivable increases $2,025. Income decreases. Store surplus increases $245. Cash decreases. Cash increases $3,000. Income decreases. Account receivable increases $1,635. Income decreases. Wages and salary expense increases $850. Utility expense increases $325. Service expense increases $220. Orders operation expense increases $75. Cash decreases $1,500. Supplies expense increases $865. Store supplies decreases. Freight increases $1,000. Cash decreases. Trial balance. Cash increases $7,683. Account receivable increases $6,860. Merchandise inventory increases $850. Store supplies increases $620. Land increases $10,000. Income increases $10,588. Account payable increases $475. Sales capital increases $13,520. Rent expense decreases $1,200. Service expense decreases $250. Wage and salaries expense decreases $850. Utility expense decreases $325. Order averaging expense decreases $75. Price increases $1,000. Income statement: net profit $7,888. Statement of change in capital: final capital 31 of July $6,632. Balance sheet: activa $25,638. Passive $7,107. Part C. 1. Why is accounting a great course to study? Accounting is a great course to study for a number of reasons. Accounting provides you with skill and knowledge that can be applied to a number of industries. In fact, so long as there are business in the world, accounts will always be needed. What do accounts do? There are many qualifications and laws that deal with money, so how exactly does accounting differ from other types of financial-related roles? First, the easiest way to describe it is that accounting involves declaring with real revenues, actual transactions, and observable finances. Why is accountancy a good foundation? Even if you did want to branch off into finance and economics, a background in accountancy lays the valuable groundwork for developing broader monetary theories. Accountants can hone their grasp through the application of economic methodologies. When studying accounting, you will acquire knowledge about the laws that govern business, typical business administration schemes, the ethics of accountancy, statistics, and accounting theory. You'll be taught how to prepare the key documents that your job will involve, including business proposal, financial statement, and tax returns. Accounting could be right up your alley. However, if you like a role that is constantly shifting and requires more speculation and risk-taking, you might want to try other financial roles. You can't really go wrong with a diploma of accounting, even if you decide to switch course later. You'll have a great foundational understanding of how money is recorded and reported that will only help you in the long term. At the very least, you'll know how to manage your own finances better. Okay, thank you, sir.